Let's get more now from Richard Perry in London. He's an analyst at the investment firm Hantec Markets. Richard, thanks for joining us on the program. Well, let's talk U.S.-China trade because it is never far from investors' minds these days. Less than 2 weeks until new tariff increases are supposed to go into effect. Is uncertainty over the status of a trade deal likely to offset some of the positive news that we're seeing today, such as the expansion in Chinese manufacturing?
Well, I think that what we do see today is that there has been a boost to sentiment, and that is undeniable. We've seen the manufacturing PMI data coming in better than expected, and that has certainly allowed a rotation out of the more safer haven plays that we saw benefiting on Friday. We've seen gold lower, we've seen treasury yields pulling higher, 5 to 7 basis points. I saw the 10-year earlier in terms of the yield being higher. So we've had a real push into more of the riskier side of the market. However, the big question is, can there be any sort of traction towards phase one of this trade agreement between the US and China? And the question marks are certainly going to be there, considering Donald Trump signing those Hong Kong bills last week. And that is going to continue to be the key theme. How China responds to those, the slap in the face effectively from Donald Trump on that side, but also whether there's going to be any rollback on the tariffs that are existing on the two countries. And that's going to be the key phase for this part of the trade deal.
Right, that is the big uncertainty that investors are concerned about. Richard, it's Cyber Monday in America, coming off Black Friday, which of course kicked off the holiday shopping season. So what are investors looking for?
Well, certainly I think Cyber Monday looks to be a positive for the markets. We see that Black Friday was a strong 19% rise in terms of sales volume, up to 7.4 billion according to Adobe. And we can see that Cyber Monday is likely to follow in the same vein, and again another 19% higher to expectation of $9.4 billion worth of sales. But I think the key will be how the individual companies perform in this. It certainly looks as though that the larger companies are performing better, and the likes of Amazon are doing well, Target and Walmart also doing well. So it looks like that they are going to be the key beneficiaries from this because of their volumes that they can generate. They can do the bigger discounts and they can do the better delivery slots, and I think that that is going to be key theme that we take out of this season of shopping. But in terms of whether it's going to have an overall impact, well, as I said, 19% growth is obviously very good, but slightly underneath expectations on Black Friday, and that possibly could be because we're seeing a lengthened sales season for the festive period. So it could well be that shoppers are sort of making their decisions elsewhere in the shopping season, but certainly at the moment it's looking pretty good.
All right, Richard, let's talk about oil. The OPEC meeting is this week, and we're expecting to hear about more production cuts. How could we see markets respond?
Well, certainly there are two key aspects to how oil prices move around at the moment. And with this OPEC meeting coming up this week, there'll be a big focus on how the production cuts are treated by the OPEC Plus members. There's been a bit of toing and froing on the oil price in recent weeks. The oil price fell about 4% a couple of weeks ago on the potential that Russia may not involve themselves in the extension of the production cuts, but it looks as though that they will be part of those cuts, and that will be very important going into 2020, considering the cut in demand expectation for oil from the likes of the IEA, which certainly has a negative impact on the oil price if at the same time the supply levels are keeping going up. We've got US, which is producing at record levels, also Norway and Brazil. So it's very important that OPEC do extend those production cuts for generating support in the oil price.
All right, Richard Perry live in London. Thank you, Richard.